Hey, what's going on, everybody? I've gotten a lot of texts and a lot of calls over the last couple of days just thanking me for putting together these videos, helping people to stop saving and start investing, to help them grow their money. And I think that they're seeing results, and that's awesome. But the number one question I keep getting, I got a lot of texts yesterday about it actually, is what do I do with my money? What do I do with my personal money other than long-term investing? You guys know that I'm all about ETFs. You know I'm all about long-term investing, and that's what I do. That is the primary thing that I do. But I do some other things with my money that are pretty fun and exciting, and I don't mind sharing that with you. I didn't want to dive into it early on, but hey, what the heck? Let's get it. All right, all right, all right. What do I do with my money? It's a question I've gotten a lot, and I'm ready to share it with you guys. It's not complicated. It's not a crazy strategy or anything, but it's something that I've learned over time, and it has worked for me consistently. So I don't venture outside of what I do. All right. If it ain't broke, don't fix it. That's kind of my theory. So you guys already know that I like long-term investing with ETFs. You already know that I like dollar cost averaging with a little bit of a twist, which is in my other video. Um, but what do I do outside of that? So 50% of my available money is tied up in recurring ETFs. So I invest 50% of my money equally between three ETFs. I love ARKK, I love ARKG, and I love ARKQ. Miss Kathy over there at the ARK group has done a fantastic job of managing those, and I feel pretty safe about putting my money there. And it's aggressive enough to where it's actually worth my money to put it there and let it sit. So that's where it's 50% of my money, and I also add to those positions once a week with my dollar cost averaging scheme. So so that's what I do with 50% of my money. The other 50% is where the fun part comes in while I'm waiting on my wealth to grow. I kind of play with the other 50. And when I say play with it, I play with it safely. I do not go crazy and buy GameStop. I don't do that. I don't buy these hot stocks that everybody's chattering about. That is a great way to get yourself in a hole. Um, GameStop went up crazy amounts and then it dropped like 80% in 3 days. Not for me. So what I do is with I have 50% left of my money. 25% of that, I day trade the three ETFs that I constantly put my money in. So when ARKK is on a downtrend for a day or two, I'll find where I think on the chart using indicators that I'll talk about in later videos, I find a low point and I say, this is a great point. I put some money in. When it starts to turn up, I put a little more money in. When I really know it's going up and I'm 90% sure it's going up, I put my other money in. And as it grows throughout the day, at the end of the day, I'll decide, okay, has it grown enough to where I feel comfortable taking my money out? Or do I need to wait until tomorrow? Sometimes I wait till tomorrow. Sometimes I go ahead and take my profit. Um, a 2 or 3% swing per day with 25% of my money is pretty good swing. And it's a pretty good investment for me. And I know it's a safe day trade because I know that if I put my money in one of these ETFs, I'm already banking with 50% of my money that it's going to grow over time. So if as it's coming down, I put my other 25% in here and it's the wrong time, I messed up, I picked the wrong spot, and it continues to go down, not a big deal. I'll sit on that money and wait because I know it's coming back up. I've bet my 50% of my money on it. So it's a safe trade. And once it comes back up and I make my little bit of percentages, I take that guaranteed money out and I start over with that 25% of my money. It's a safe bet when you're going into day trading or swing trading. Okay, real quick, day trading is pretty simple. It's you buy something one day and you sell it in the same day. Swing trading is a little different. It's you buy something today with the intentions of holding it, throughout another day or two or a week or a month. Swing trade is a short-term investment that's not a day trade. Okay, now with the last 25% of my money, it's a gamble. It's a day trade or a swing trade gamble. I like biotech stocks a lot. I like electric vehicle stocks a lot. I like electric charging station stocks a lot. And I use indicators to watch those stocks. And when I think they're at low points, I'll buy a little bit with my other 25%. And as it comes up, same theory, I'll put a little more in. When it starts going up and I say, okay, indicators all say this is a green light, go. boom, I put the rest of my money in. All right, guys, so just as a quick example, I want to show you what I'm talking about when I say I try to find those low points. So right here, I'm looking at KPTI, which is a pharmaceutical company that I invest in. I try to day trade and swing trade a lot. And it was actually brought to my attention by my brother-in-law. He noticed it was such a strong pattern of constant up to about this point, down to this point, up, down to this point again, up, down to this point again. So what I like to do is I wait until it hits, down here close to this line. This is the support line. This line is where it typically does not break below for the last 3 or 4 months. So what I do is I wait until it gets down here. I'll put a little bit of money in here. When it shows that it's increasing, I'll put a little bit more money. When I see that it's really picking up momentum, I'll put in more money. And my goal is when it starts to get close to this line, the resistance line, which it does not usually cross, I try to find the top and I sell and I take my profit. And then I wait a couple of days and I let it do it again. When it gets down close to this line, I go through the same process. And that's what I'm talking about when I say that I wait for low points and I sell at high points. And this is KPTI, like I said, and it shows a great example of how it can stay in between these support and resistance lines and bounce back and forth and make you a lot of money. And that money I play very safely with. If I get 2% gains or 3% gains, I'm pulling my money out and I'm taking the profit, because investing in individual stocks like electric vehicle, electric charging, biotech, you run the risk of those things tanking and taking a bunch of your money, and then you just have to sit there with your money invested in these stocks that aren't doing anything. So you don't want to leave them in there long term. I like to, with my last 25%, get in and get out as quick as possible. And that's the safest way that I know to play it. So that's what I do with my money. Long-term investing with a vast majority, or at least half of my money, 25%, I day trade or swing trade these same ETFs just in case it doesn't work out for me. I know they're going up over time and I can sit on that money. Last 25%, play. It's a gamble. It's like going to the roulette table, in Las Vegas. The only difference is I have indicators that I've studied, and I know how they work, and I know how to read charts, and I've studied how to do it for about 4 or 5 years now, and I can honestly say that when the indicators point in a direction, most times it's green light, it's money. So that's what I do with my money. So I hope that helps you guys out a little bit. It's just a theory that works for me. It's a method that it works for me. It has for the last year. I haven't had no trouble with this method, and I think it's safe. I really do. I hope that helps you guys a lot. It may not. You may say, nah, that's not for me, but you asked what I do with my money, and you got it. Appreciate it, guys. Hey, hit the subscribe button below, hit the notification bell. Appreciate it.